Consol Energy is the second biggest portfolio position for David Einhorn. It is also owned by Mohnish Pabrai and Ainslie. So if such investors are interested in this company, then it may be wise to spend few minutes to try to figure out what do they see in it. Well, Consol Energy was spun off from CEIX Resources Group in 2017. They operate two main mining complexes, one that focuses on coal that is used mainly in power generation, and the other complex that focuses only on metallurgical coal that is essential in steel production. Right now, their main business is energy, but as the market evolves and the world transitions from coal to other energy sources, they are well prepared to change. They can continue their operations by shifting focus to the steel industry. So let's go through the 5 main areas of this business to better understand it. But first, if you were to invest $1,000 into this company after its spin-off in 2017, you could buy around 46 shares. And now they would be worth something close to $4,204. And this company also pays dividends. So in that time, you would get $207 as dividends. So if we add together the current value of shares and the dividends, we get $4,411. And that is a gain of 340% since 2017. That is a very impressive result. If you invested in the S&P 500 in that time, you would get a result of just over 100%. Still very nice, but not even close to Consol Energy. But it is, of course, very important to remember that future results don't have to look anything like the past, especially in a cyclical industry like coal mining. Individual insiders, that is an X. 1.9% of the company is owned by individual insiders, and we would like to see it over 2%, so it is very close. The management definitely has some skin in the game. We may want to see more ownership, but 1.9% is nice. And are individual insiders buying? That is an X. We see 2 sale transactions in the last year and no buy transactions. And do super investors own this company? That is a check. There are 3 super investors that put their money into this company. And like I said at the beginning, they are David Einhorn, for whom it is 8.2% of the portfolio, Mohnish Pabrai, and for him it is 7.6%, and Ainslie, for whom it is only 0.03%, so nothing significant. And are super investors buying right now? That is an X. Ainslie bought over 4,500 shares in the last quarter, but Mohnish Pabrai sold close to 195,000 shares, so the difference is meaningful. Return on invested capital, that is an X at 5.1% median returns, so not what we are usually looking for. And what do we know about net profit margin? It is also an X. Consol Energy is averaging 10.5% over 5 years, and the industry median is 11.6%. But if we would look at the recent net profit margin, we would find that it is 18.7%. So not bad at all. And now let's take a look at share buyback. It is an X. Since the IPO, they issued around 5% extra shares. So they are diluting investors, but in a very small way. And the debt, it is a check. It would take just over half a year to pay the long-term debt with a 5-year average free cash flow. So they have no problem concerning that. Revenue growth, that is a check at 11.3% compounded annual growth rate. And we would like to see this number higher than 10%, so that is a nice growth. And free cash flow growth, that is also a check at 26.7%. That is very impressive. But let's also look at earnings per share growth. That is yet another check at 42.1%. Quite incredible. I really did not expect a coal mining company to be able to grow so fast. It just shows that if a company is run well, it can grow much, much faster than the market. The dividend yield is 1.1%, so shareholders can expect to get $1 annually per every share. And the payout ratio? This is an X at 11.1%, and we want to see the payout ratio between 20 and 50%. So this is a very safe dividend, as we are only receiving 11% of the earnings. And we would prefer a higher percentage, but a lower payout ratio has its advantages. First, it means that the company can comfortably continue paying this dividend. Second, it retains most of the earnings, allowing for reinvestment in growth. And lastly, there is room to increase the dividend in the future. So, what do we know about dividend growth? It is an X because they are paying dividends only since 2022, so we can't calculate the 5-year growth rate. Price to earnings ratio is just 7.1, so that is very low. We have to pay just $7 for every dollar this company earns. But to properly value Consol Energy, we will use a discounted cash flow analysis, and we will use a 5-year average free cash flow instead of the recent one. And there are two main reasons to do that. One is that the current free cash flow is very high when we compare it to recent years, and we want to be more conservative. Secondly, it is a cyclical company, so using a 5-year average should give us a more realistic valuation of the company in the long term. So, in the low scenario, we will estimate a growth of 1% for the first 5 years and then no growth. In the medium, 2% growth for the entire 10 years. And in the high scenario, 4% for the first 5 years and then 3% growth. So the low scenario is predicting almost no growth in the next decade. Medium is close to the expected future growth of the coal industry, which is around 2.1%, and the high one is showing a story in which Consol Energy will grow much faster than its peers. So, with such estimates, the intrinsic value in the low scenario is $115, in the medium $127, and in the high scenario $143. But we have to always apply a margin of safety to those prices. I use a 30% one. But before we do that, I just wanted to let you know that you can pre-order our brand new course on company valuation. Thanks to it, you will be able to value any company not only with discounted cash flow analysis, which we are using here, but also with comparable company analysis, dividend discount model, and with PEGI ratio. And all of that without substantial math skills, because as a bonus, you will get a free access to our valuation calculator, which helps with all those methods. And if you pre-order now, you can get a 20% discount with a code you are seeing on the screen at the moment. Just go to stockinvesting.academy or click the link below. Okay, so let's apply the margin of safety. And with it, we get in the low scenario $81, in the medium $89, and in the high one $100. And the current price is around $96. So Consol Energy may not be cheap right now, but it definitely looks like it is somewhere around its fair value. So let's go to our Stock Ranking Pro, and first let's take a look at the overview of this company. So financial health is fine, but where the company really shines is the growth. Now, it is worth pointing out that it is a cyclical industry, so we should not assume that such growth will continue without interruptions. We have to be ready for a lot of volatility with a mining company. And since we are talking about the industry, let's compare Consol Energy with some other mining companies. So let's filter our ranking so that it would show only Consol Energy, Vale, Rio Tinto, Warrior Met Coal, Arch Resources, and Alpha Metallurgical Resources. If we sort them by growth, we see that Consol Energy gets the second spot after Alpha Metallurgical Resources. But when we look at financial health, we see that they are actually the weakest of the mining companies. Nevertheless, there are a number of things to like about Consol Energy, mainly the impressive growth and fair price. But a factor I would consider as a potential problem is the long-term future of the entire industry. But we have to understand that even if thermal coal will slowly disappear, metallurgical coal is here to stay, because at least right now there is no replacement for it in the steel industry. Thank you so much for watching, and see you in the next one.